It's no secret that Tesla had a rough year, facing production delays in China and, of course, Musk's Twitter backlash. However, that doesn't seem to deter analysts who follow the EV giant, with Wall Street seeing Tesla as a buy ahead of earnings.
Gene, from the notes, it sounds like you think Tesla stock hasn't seen the worst of it, that there will be better entry points.
Wedbush Securities' Dan Ives calling tomorrow's release and subsequent earnings call, quote, one of the most important moments in the history of Tesla.
In this video, we preview Tesla's Q4 and full year 2022 earnings, and as always, I'll be live streaming the entire event with additional context and information. Who's this person talking? Are they an analyst? What's their track record? What's their price target on Tesla stock? And so on. Be sure to stop by and say hi in the chat. So let's listen to what the folks in the mainstream finance media and a few analysts have to say about Tesla and what they're looking for in earnings. And speaking of earnings, if you didn't catch it, yesterday I posted an exclusive Patreon video sharing my full year 2022 income. All income sources, including YouTube, Patreon, affiliates, and plenty more. I also run through my entire earnings history from the moment I began full-time work. If you're not a member, you can join Patreon with the card in the corner or the link in the pinned comment.
We were just looking at tech, and Microsoft and Tesla in particular are in focus ahead of their earnings reports this week after a year of poor performance. How does Wall Street feel about the tech titans? What are investors looking for?
Dan Ives, he notes this morning in a note that Tesla, their earnings call this week is probably the most important in its recent history.
Yeah, most definitely. Now, the street's still relatively bullish also on Tesla, even though the stock has really last quarter took a big beating. You've got Tesla analysts recommending 27 buys on Tesla. You also have 13 analysts with a hold and 6 with a sell.
I cannot recall a moment in Tesla's history where more stock analysts on Wall Street were recommending investors either hold or buy Tesla stock. Throughout most of Tesla's history, it seemed like most analysts were advising investors stay the hell away from the stock. The tide has truly turned. I think this is due in large part to Tesla stock's utter collapse over the last 12 or so months, still down close to 70% from all-time highs. But this is quite a moment in time. When the Wall Street stock analysts, who generally speaking do not understand Tesla, massively underestimate Tesla, and have been very bearish on the company, claiming the competition's coming, Elon doesn't know what he's doing, rah, 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 rah. When even the analysts, who on average don't understand Tesla, are almost universally recommending investors buy the stock, or at the very least hold it, it's worth paying attention.
Piper Sandler putting an overweight recently on Tesla and lowering its price target from 340 to 300, saying that, look, Tesla took longer than expected to cut prices, but now that the valuations have been reset, investors should be buying Tesla. Also saying that Tesla can easily put up forth a delivery growth in 2023 of more than 50%, predicting delivery growth of anywhere between 300,000, 600,000 units just in the U.S. And gross margin forecast, even though that's been lowered by many analysts, Piper Sandler saying that they wouldn't be surprised if in 2023 they surprised to the upside.
I won't be surprised either. Remember, there are 2 new factories currently ramping up, Austin and Berlin. They're currently dragging on margins. As they ramp up, margins improve. In addition, Tesla is not standing still. They continue to drive their costs down. They're implementing new innovations in manufacturing that are saving costs, saving time, and Tesla's already told us they're seeing deflation in all of the material costs. There are a huge number of tailwinds helping Tesla in terms of profitability and gross automotive margins this year. I think a lot of investors hear price cuts and immediately assume, oh, well, there goes the industry-leading margins. Not so.
Also, Canaccord, I know that you interviewed Canaccord's George Giannakouros recently, and Canaccord also bullish on the stock. Because, look, even though the stock pulled back last year, a lot of that had to do with also many saying Elon Musk and Twitter, and also based on the demand situation in China. You still, they're highlighting the full-service driving software. That's expected to increase gross margins. And also, what was very important that Canaccord highlighted was commodities came down in price. And that's something that Elon Musk has talked about, that they have been seeing a reduction, a deflation when it comes to commodities as well. So that is expected to help.
I mean, and definitely in contrast to Microsoft, the sentiment around Tesla is not as bullish, right? You talk about 52 buys for Microsoft. It's 27 in the case of Tesla, and then 13 holds and 6 sells. So there are a number who are still underperform on Tesla going into the results.
Yeah, that's right. It's not as bullish as you mentioned when it comes to Microsoft, but still out of the EV makers, you still have quite a bit of bullishness.
It's no secret that Tesla had a rough year, facing production delays in China and, of course, Musk's Twitter backlash. However, that doesn't seem to deter analysts who follow the EV giant, with Wall Street seeing Tesla as a buy ahead of earnings. Well, here with the details is Yahoo Finance's Pras Subramanian. Pras, it's hard for people not to be bullish on Tesla for some reason.
Yeah, Rochelle, there's always a lot of excitement for that stock. But, just turning to sort of the stock performance of last year, it's just down so much that for analysts, they kind of just see upside from here. We've been tracking some of these numbers. 57% of analysts, according to Bloomberg, have a buy rating on the stock right now ahead of earnings tomorrow night. We talk about this possible bounce back here. We've seen the shares kind of move up higher already in 2023.
I mean, there you have it, ladies and gentlemen. On screen now, just 13% of Wall Street stock analysts recommending investors sell Tesla stock. I actually cannot believe this. Just 13%. Contrast that with almost 60% recommending investors buy. As I mentioned, I cannot recall a moment in Tesla's history in which less analysts were recommending investors sell Tesla stock than there are today. And I don't think this is an example of Wall Street finally understanding the company. I just think this is a result of Tesla plummeting so much that even the analysts who don't get the company, think the competition is going to destroy them, don't understand the software component, just literally don't get the company. Even these analysts are now, that doesn't make sense. All right, we're going to change our recommendation to buy. And remember, my prediction is that analysts will be chasing Tesla stock up all year with their price targets. Of course, I could be wrong, but I think most of Wall Street will be the ones who are wrong. We'll have to wait and see what happens throughout 2023, but my best guess is overall the trend is up, very up. And I suspect that many of the analysts on Wall Street who are currently recommending investors buy Tesla stock with a piss weak price target of $210 or somewhere in that vicinity will chase the stock as it moves higher throughout the year, with reasons such as faster than expected production and delivery growth, more robust margins than we expected, a complete absence of credible competition, which we were sure would be coming finally after all these years.
But beyond the rating, what's more important for analysts here are things like gross margins, right? You have analysts like Tony Sacconaghi at Bernstein who are concerned about margins shrinking because of those price cuts, which happened in Q1, so we won't see that reflection in Q4, but might hear about it in terms of guidance. Other analysts like Canaccord's George Gianrikas, who you guys had on yesterday, talking about how margins aren't that important because it's actually all about sort of growing their market share. And they can do that because they can cut prices and also use kind of the cheaper component prices that they've been seeing recently, and also sell high margin products like FSD or full self-driving that will allow them to sort of recoup some of that margin. Also, another thing to watch is, of course, volume and deliveries. Tesla has had a long-term target of 50% CAGR growth rate for deliveries. Some analysts like Dan Ives think that's unrealistic, given the fact that would mean 2 million cars delivered by the end of 2023. When you have only 4 factories there, making 500,000 units per factory is a lot to do in 1 year. Ives says that Tesla and Elon Musk should come clean and cut that and make it a bit more reasonable, and that will assuage kind of investor concerns about Tesla going forward.
So let me get this straight. If I'm understanding correctly, Dan Ives, who doesn't believe that Tesla can maintain a compound annual delivery growth rate of around 50% or more over a multi-horizon, since he doesn't believe that this is possible for Tesla, even though Tesla believes this is possible for Tesla, Dan Ives believes that Tesla should reduce their publicly stated target to something that he believes is realistic, not something that Tesla themselves are aiming for and also believes is realistic. Did I hear right?
Gene, from the notes, it sounds like you think Tesla stock hasn't seen the worst of it, that there will be better entry points.
So let me get this straight. Gene Munster is advising investors don't buy Tesla stock at these current levels. I guess suspecting there's going to be a better entry point. In other words, it's going to be even lower in the near to medium term. Hence an even better buying opportunity. Hence don't buy now, near 2-year lows, wait even more, hope that it'll go lower and then buy. Gene Munster likes to point out often that he doesn't drink the Tesla Kool-Aid, and I happen to think that Gene Munster's certainly been drinking something to make this statement. Don't get me wrong, he could be right. Tesla stock could do anything. Like literally anything. Nobody knows what the future's like. But in terms of playing the odds, if, like myself, you believe Tesla stock is stupidly cheap, ridiculous, I mean, to the point where it just doesn't make sense, and spoiler alert, that is what I believe, I mean, hello, still valued about the same as Coke, Pepsi, and Chipotle, if having seen the stock collapse about 75% since recent all-time highs, if presented with an opportunity to pick up Tesla stock with a market cap under $500 billion, and you're advising people to wait because there'll be a better buying opportunity, when it's already the fucking deal of the century, in my opinion, I just don't understand the thinking. I'm sure Gene's going to have a reason, margins might disappoint, the stock might crash, I get it. But could, should, would, might, hope, how about with a long-term horizon? Gene himself likes to discuss his 5-year investment horizon. With a long-term investing horizon, why would you add the additional risk of waiting for the stock to dip and become even more absurdly cheap when you have the option of buying today at literally ridiculously low prices? This is the question I have for Gene Munster. Look forward to his answer. And to be clear, I'm not all talk and no walk. I've been buying Tesla stock with every spare cent. My last purchase price was $136 per share. I had the option of waiting, hoping the stock would go even lower. But at these levels, that is not a bet I'm willing to take. the odds do not appear to be stacked in my favor.
I do believe so, Melissa. And just to put some perspective around this, is this earnings period is an opportunity, a rare opportunity where Tesla needs to get everyone on the same page. I'm still optimistic that this company is undervalued over the long term, but let's talk about Wednesday initially. There's the demand piece and then the profitability piece. On the demand side, we know that the price cut on the all-important Model Y, 30% price cut with the addition of the tax credit, has stoked demand. There's some very primitive tools we can use to look at how much of the demand has been stoked. But if you look at Google Trends, for example, search traffic around Model Y is up double from where it was a week ago. Model 3 is up 50%. And you look at the other EV makers and they're all going down. And so that is an indication that demand is good. Retail investors are picking up on that. Also, the lead times, they've basically been extended out an additional month and a half over the past week. That's also been picked up. So part of this 8% move is anticipation, optimism that the 30% increase or decrease in price for that Model Y is going to have an outsized impact on volume. I expect that to be true. But there's one piece that we don't know as well, and this is to get everyone on the same page, which is the profit. And just to finish the thought, Melissa, is that their automotive gross margins, ex credits, were 27% in the September quarter. I expect them to give guidance somewhere between 15 and 20% for 2023. And that's the piece that I think will cause a dip in shares on Wednesday.
So, Gene, in theory, we should know all this. We know that the margins will have to come down because of these price cuts. That is just math, even if they're selling more cars. And so why wouldn't that be factored into the stock now, even with this run up? Do you think that maybe it's not factored in enough?
Well, there's a couple reasons. One is that the volume piece, there is, well, let me just take a step back. I think retail is having an impact on Tesla shares here. I think there's an emotional side that plays into that. And I think that one of the emotional pieces is that as you think someone who's optimistic about this, maybe a little bit too optimistic in the near term, would say that the volume is going to create economies of scale that will basically support margins separately. I think that, or make the margins go down not as much as maybe what I believe that they'll go down. That's one piece to it. Another piece where this is just getting people on the same page is that the component supply, the component cost environment has been starting to get more favorable towards Tesla, but we don't know to what extent that is. I just do the simple math, is that the average discount across the board, across all of their vehicles, if you weight it by volume, is close to 15 to 20%. And that is, a lot of that comes from the profit. But Melissa, I think that's the reason why I think you see some of this move here, is that you can kind of build a case where it's not going to be as bad as what I'm predicting.
So, Gene, when you look at the stock and it traded down to that August 2020 level, did that have more to do with Musk's personality being divisive or actually fundamentals in the stock? I'm long the stock.
Jesus, what is going on? Someone on CNBS, long Tesla stock, and saying it out loud. Talk about a double head scratcher. Most analysts recommending investors buy Tesla stock. Now you have folks in the mainstream media who historically have hated Tesla stock, now admitting out loud that they're long. Curious.
But I do not want to go into earnings. I agree with you. I don't want to go into earnings long, so I'll take a look after the fact. But the idea that it could upside surprise versus downside surprise, I'm erring on the downside surprise. It seems like that's where you are too.
I am on that. Again, big believer in this. I don't want my optimism around the long term to change, and I could get this wrong, and it could be up 10%, but ultimately I'd still be positive. But what has impacted it over the last, what really pushed it lower was, of course, just concern about demand, and then they put the hammer down as on the pricing, and that just kind of gave confirmation. That's why you saw that big dip. So I still believe ultimately they're making the right decision. I would just say this: when you put all this together, I think that they're going to really put other car companies in a tight position in 2023 and 2024. And so, Steve, don't make me give you a mixed message there. I think that this is still a great company. I think that we just got to get everybody on the right page about what the profit profile looks like, because that's been a big part of the rise of Tesla shares over the past 3 years is just this really impressive gross margin.
We're about 24 hours from Tesla's highly anticipated fourth quarter earnings release. Wedbush Securities' Dan Ives calling tomorrow's release and subsequent earnings call, quote, one of the most important moments in the history of Tesla and Musk himself.
I'll be curious to hear why Dan Ives thinks this is one of the most important earnings calls in Tesla's history, because I think it's one of the least important in their history. Admittedly, many confused analysts on Wall Street might be looking to Tesla for guns on Tesla. We don't understand. What's the gross margin going to be after the price cuts? We don't know how to, we can't figure that out. Please tell us so we can put it in our spreadsheet. Maybe these analysts are also looking for Tesla to reassure them that their long-term goal of a 50+% compound annual rate of delivery growth remains intact. Maybe this is why Dan Ives thinks it's going to be one of the most important calls in history, because Wall Street are confused, they're scared, they want Tesla to hold their hand and tell them everything's going to be okay, our margins are going to be fine, there's plenty of demand, everything's fine, relax. Because seriously, I don't really think we're going to learn anything of any value on Tesla's earnings call. Analysts panic about margins, Tesla says calm the f*** down, they're going to be fine, they'll be a little bit lower, but f***ing relax. Material costs are coming down, parts costs are coming down, economies of scale, blah f***ing blah blah blah. Calm down, still aim for 50% over a multi-year horizon. The end. I think that's how the call goes, which is rather unimportant, hence my ability to tell you ahead of time what I think we're going to hear on the call. If it was important, I wouldn't be able to predict what was going to happen. I really am expecting a boring ass earnings call. Record profit, record this, record that, we're still on track, blah blah blah. No need to panic about margins. We've got plenty of pricing power, costs are coming down. The end.
Now, we say that with the caveat, we love Dan, a little prone to hyperbole at times, but
oh damn. He actually said that out loud.
It certainly is important for Tesla. With their recent vehicle price cuts and year-end delivery numbers likely already priced into the stock, investors will be focused on how Tesla stacks up against expectations. The street looking for adjusted earnings per share of $1.12 with revenue of $24.1 billion. We'd love to hear more about margins, but we're certainly not. In terms of those price cuts, that's really a Q1, maybe even Q2 story down the road, but maybe we hear from Mr. Musk on the call.
Yeah, you got to think that an analyst or two are going to ask about that, the impact that it could potentially have on their business when you talk about some of that margin pressure from the price cuts. It also is going to be likely one of the first times CEO Elon Musk faced questions publicly since he abruptly left a Twitter Spaces with journalists in mid-December. Just last month, Morgan Stanley's Adam Jonas saying in a note to clients today that he expects management to be upbeat about the positive reaction following Tesla's recent price cuts. But Jonas adds that, quote, investors must have confidence that fiscal year earnings have bottomed before seriously revisiting the stock. That process for investors should extend beyond Tesla's March 1st investor day. This is all according to Jonas. So again, a number of things will be unpacked in this earnings report. A lot of it will have to do with the demand side of it. Some of that obviously will likely be maybe helped here with those price cuts. I think it's safe to say that management will likely be hyping up the demand that they have just seen in the last week or so after that. But I think stepping back, talking about the tough backdrop that Tesla is up against right now. Obviously, waning demand could have been one of the huge reasons for those price cuts, but also that stiffer competition out there. And we saw a number of other EV makers, a number of the traditional automakers that are in the EV space, their stocks under pressure following Tesla's price cut, because the thought there is that they might then have to lower prices and put more pressure on their margins as well. So again, I think just a broad takeaway in terms of how strong or how weak this sector is right now, and any trends that they could pull out, I think will certainly be a highlight in tomorrow's report.
Really just want to hear about demand into this weakening economy.
I'm going to spoil the end of the movie, so if you don't want to know how the earnings call plays out, don't listen to this next 30 seconds. Analysts will ask on the call for sure. Tesla, we're scared. It's a recession. Haven't you heard? Car sales collapsed during a recession. Aren't you concerned about a demand slowdown? Aren't you concerned you won't be able to sell all your production? Are you going to have to run your factories at below maximum capacity? Are you going to have to slow down your investments in future expansion? Are you scared? Should we be scared? Should we be panicking? Should investors be selling Tesla stock? Tesla will respond, we're going to sell all the vehicles we make. Relax. We have huge pricing power. Our costs are coming down. We don't care if we need to sell vehicles at a 0% margin, but that's extremely unlikely. Unless World War III breaks out in addition to a severe recession, we won't even need to do that, but we will if we need to. Tesla's goal is to expand their fleet. I think what I'm trying to say is many analysts are going to be looking for reassurance from Tesla. Please hold me, Daddy, I'm scared. It's a recession. Should we be scared? To which Tesla says, Daddy's got you. Everything's going to be fine. relax.
I'd love to ask him, if you had a chance, how much time he is spending at Twitter versus Tesla. It's interesting because he has not been at SpaceX, and we've seen, well, the stock, literally the valuation, a rocket ship. We'd like to hear about the Tesla Semi. We'd like to hear about the Tesla Cybertruck. We expect him to be on the call. In the last call he was on, end of Q3, he said, looks like we'll have an epic end of year. I don't know how you define epic, but I think he was spot on about that in terms of the magnitude of the developments for Tesla, because they started with the price cuts in China, which were received very poorly. And then once they were really absorbed, they performed very well. Same thing here. We heard analysts very critical of those price cuts, but then it's popped demand at North American stores. And so it looks like a win-win there for him. It's going to be a very interesting report. Very fascinating call. One question for him?
Well, I was going to say, we also haven't even mentioned the Cybertruck. That might come up just in terms of the plans for there. The semi-truck, the additional plants that they have made. Did you mention the Cybertruck?
I mentioned the Cybertruck
you're talking so
and
much.
the Semi. I know, I'm talking too quickly. I apologize.
Well, I was going to say, there's just so much to dig into when it comes to this report in terms of the headlines that we could get out. A lot of it also has to do with some of those factories, too. Some of their new plants that they have made in Nevada, Mexico, Indonesia, any color there, I think will certainly be something that investors will want to know.
I, for one, am most certainly looking forward to what will be Tesla's most boring earnings call of all time, in which they tell us absolutely nothing we couldn't already have deduced. Although, I'm sure being a Tesla earnings call, there'll be at least one or two juicy tidbits or surprises. Don't forget, I'll be streaming the entire earnings call as per usual in partnership with Clean Technica. Come say hi in the chat. There'll be loads of additional context and information, making the earnings call a little bit more digestible. Following that, I'll be posting a summary, my thoughts and notes for the full earnings call, and then some media reactions. Don't forget to head over to Patreon to unlock over 280 exclusive videos, including the most recent, my full year 2021 income reveal. Every dollar I earn from all income sources, including at least one source of income very few of you will know I actually have. If you're not a member of Patreon, you can join with the card in the corner or the link below, and I'll see you over there. Love ya.